Welcome back to the Group Practice Accelerator podcast, brought to you by Polaris Healthcare Partners, where we leverage decades of healthcare and business experience to drive growth in successful group practices just like yours. If you're a healthcare entrepreneur and you're interested in building, scaling, or exiting your group practice, you've found not only the industry's leading resource for business education, but a team of trusted advisors dedicated to helping you achieve and exceed your goals. In short, the team at Polaris creates clarity, confidence, and results. I'm your host, Jamie Falash, and the Group Practice Accelerator podcast is on the air. Hey everyone, thanks for tuning in because today we're talking about your finances. And I've got an expert in the house that I know you want to hear from. Now, I know that's a vague and really broad way to introduce a topic, so let me expand on that a little bit. And aren't we all more than just a little bit glad that we have experts to handle that aspect of the business? We definitely are. So when we talk about the finances of your business, we really need to pull in everything from accounting, production and collections, to planning for your next steps and the years to come, in fact, in terms of accurate forecasting, even how your data is managed, and does it serve a bigger growth picture, or is it siloed and about to become a roadblock for your plans to scale? Does your current financial picture follow best practices for clarity, or does your reporting create confusion? In any case, getting clear on and optimizing your evolving financial and data processes are going to be a foundational and ongoing necessity. And here with me today to walk us through some of those foundational elements that many businesses still struggle with, so you're not alone, is Ken Kaufman. And Ken is the co-founder of AccruDent. And you're going to want to hear what he has to say because he's got a wealth of financial knowledge and guidance to share with us, including key takeaways for your own business. So grab your pen and notepad. Ken, welcome to the show.
Thank you so much, Jamie. I'm excited to be here.
Oh, glad to have you. So why don't we start with having you tell our audience a little bit about yourself and how AccruDent came to be.
Sure. I appreciate the opportunity. I'll be as brief as possible here. Having been in the dental industry now for 20 years, it's kind of hard to be too brief with all of that.
Okay.
I've sat in the CFO chair of multiple high growth DSOs. One grew from 8 to 80 locations. Another we grew from 5 to 40 locations in just a couple of years. I've been all things dental. And over the years, I started to get other CFOs of groups and different things that would call me, and over time started to gain a real expertise learning how everybody else was doing things in the industry as well. And so that really brought us to today, where my son and I founded AccruDent, and our focus is on helping dental groups figure out how to structure themselves so that they can grow as effectively and efficiently as possible and drive the best outcomes for the organization. I might be saying to sell, I might be saying to hold it for the long term. It's really whatever those groups want to try to accomplish. At the end of the day, the financial component is so critical to being able to drive success. And profitability is actually a mandate, because if you're not profitable as an organization, you can't reinvest, you can't buy new equipment, you can't add new procedures and do all those sorts of things. So that's what we do and what we've been doing my whole career, which has basically been in dental.
I love your journey led you to this spot, because what a valuable service product that you brought to the industry and born out of your own experience and the experience of others, which is, the best way to learn. You and I have talked about optimization in kind of preparing for today's call. And, anybody that knows Polaris knows that optimization's one of our mantras. And we drive that home, when it comes to efficient, effective growth. And by that, I mean growing the right way from the get-go. And that includes the right people, processes, associate recruiting and retention plans, growth capital solutions. I could go on. And I know you share that same mission. And when we talked about optimizing when it comes to financial intricacies of a business, specifically the group practice space or the emerging group practice space, we find that many docs often don't get off on the right foot. So we want to kind of walk them through this and provide some resources. So I say we start with some basics. let's talk about accrual accounting. What is accrual accounting and why should group practices care?
Sure. This is a hot topic for me. When I wrote my book, this was a big focus as well to really try to educate the dental world and the dental market as to why this is so important. The opposite of accrual accounting is cash basis accounting. Cash basis accounting is basically what's coming into my bank account and leaving my bank account each day
Mm.
or each month, like pick your period of time. That is a very lumpy way to look at your financial performance because let's just say one of your payers, if we go back to the dental exchange problem that happened last year, where all of a sudden nobody was collecting anything. Well, what happens on your cash basis is it looks like you didn't do any production. And we all know that that's not true. There was
Right.
still a lot of production happening. It was taking longer to get paid. And so the purpose of accrual accounting is to look at everything that's going in and out of your business in a way that tells you what you actually did and accomplished during that period of time, whether it's a quarter or a month or whatever it is. And it has nothing to do with how much was collected. It has everything to do with how much production was generated. What were the expenses that were incurred to create that revenue or that production and everything that goes with it. And it includes the payroll, the actual cost of the doctor and the staff and everything, and getting all their costs lined up with that same period where you're recognizing your revenue. It's the accurate way to understand your financial health and everything that goes with it. And if you neglect doing this, you're just not going to be able to see and understand what's really going on a day-to-day, week-to-week, month-to-month basis in your organization.
Well, it just seems like that would create some really confusing reporting. Does that sound right?
Which one? The accrual or the
When you're not working on accrual accounting, it seems like when you are working from a cash basis and you're not getting a real clear picture of what that looks like, accounting for production and the other elements that go into your day-to-day practice, like that's got to be how do those reports even match up?
they don't. Yet so many of our dentists that we know and groups that we know that are trying to grow and figure these things out, honestly, they're flying blind. And if I'm going from one practice to two practices to three practices, like you could say, okay, maybe if you've got one practice or two practices, you can kind of still keep your arms around things because you're signing most of the checks and you're still doing those things. But if you're planning to grow at any level of scale, you have to get to accrual or else you literally are flying blind.
Absolutely. And I'm a big advocate of doing it right from practice one. Why start any other way? Why have to go back and correct it? And that
That's
kind
right.
of leads me to my next question on financial planning. So, can you talk a little bit about the purpose of financial planning and analysis in a group practice, even for our emerging groups, and what value that brings? I mean, some of that's evident just from what you've already told us.
The financial planning and analysis, if you think of your financial statements where you're getting an income statement, a balance sheet, and a statement of cash flow. Well, actually, if you're on accrual basis, you're not even getting a statement of cash flow because it doesn't even, you can't even do it. So for these groups, here's what this does. You've got all the historical reporting hopefully in place. It's accrual based and you get these financial statements. Once you've got that locked and loaded, what you want to do is start implementing financial planning analysis, which is the stuff that looks forward. All of your financial statements are looking backward. It's what already happened.
Yeah.
Now we want to develop the skill and the capability to start to predict the future. Now, I'm not saying that I or anyone else has a magic crystal ball here, okay? However, over time, we can validate assumptions about how things function and work inside of your practices that you're supporting and running. And we can develop out what your future is going to look like. And you say, well, why, Ken, why would I care about that? Well, because we all are trying to figure out how to grow. Tomorrow, we need to be growing from where we were today and next month and so on and so forth. And so to figure out how to build and grow your organization and to do it efficiently. And when I say efficiently, it's yes, with people, but mostly it's about with cash. How are we preserving cash? And how are we utilizing cash to drive our growth? All of these things, if we go too fast, we can run out of money. If we go too slow, we can be missing out on all kinds of opportunities. The ability to forecast helps us optimize I'm using your word there.
That's
Um,
right.
it helps us optimize our growth strategy. Now, it doesn't mean that our forecasts are always perfect, but directionally over time, we get better and more validated to where you can start to have a lot of confidence, notwithstanding a global pandemic or, some of these other things. We can get really accurate, which gives you the confidence to say, all right, it's time to put my foot on the gas pedal and let's go, or hold on a second, we need to throttle back because something changed. All of that is just part of running the business day to day. And it is so empowering once you put it in place.
Well, and you said a couple of words there, predictability and confidence. Those are a couple of words that our fractional COO executive Aidan Bradley and I were just talking out about on a recent podcast, and how that creates a level of certainty. And I can definitely see how when you're drawing from history, you can predict the future a little bit. Again, like you said, no crystal ball here, but when you've got that historical data to draw from, at least you know what to expect from your future. You can set some growth parameters without, going to the extreme end of that. But again, certainty around the future and what to expect, of course.
Jamie, I'll mention one other thing as we were talking about accrual accounting. Just to be clear, if you're not on accrual, your financial planning analysis is crap
Okay.
because you're using crap as your basis. Okay. And that's a problem. You cannot, over time, successfully forecast where your business is going. And so, if you're listening in and you're saying, I want to skip over and not get accrual accounting and get that stuff tightened up and buttoned up. If you're saying, I don't want to do that, I just want to jump straight to financial planning analysis, it does not work because the basis is you've got to look at your historical performance to be able to drive or create the drivers inside of your financial model that helps you see what's going to happen in the future. So
Yeah. And without that right process in place, there are going to be some roadblocks down the way that you don't want to experience. Now, do you does one need a fractional or full-time CFO to accomplish all that? What are your feelings on that?
if we talk about sort of the progression of I'm at one practice and I'm going to become a group over time, having somebody who just does some basic bookkeeping right at the very beginning with that very first practice without doing accrual is probably okay. Having a bookkeeper, that's probably not a horrible place to start. You're going to ultimately want to start to graduate. And when you get to, let's say, 5 locations, really should be thinking really hard about the accrual conversion. And most likely you haven't built out a strong enough internal team of accounting people because you're not big enough to afford to have a full-time accountant and those sorts of things. So that's where fractional can become very, very helpful. And so having a fractional CFO that can come in and help, or even like a fractional accountant, because you don't necessarily need a full-blown CFO to get you converted to accrual. The organization, AccruDent, that my son and I just founded, we are doing this for a lot of different organizations, helping them get that conversion done. There are several ways to make that happen. But what happens over time, you grow your organization, you get to 5, you're going to probably need a little bit more horsepower than just that bookkeeper is doing with giving you sort of cash basis type things. If you haven't converted to accrual already, there's sort of a stair step to ultimately where an organization has a full-time CFO, which is usually between the 20th and 40th location. If I'm just talking about GP practices and those things, I realize some practices do a lot more volume. And so they would need to do it sooner on a location count or vice versa. But ultimately having somebody who knows and understands your business and understands all of these key financial principles becomes a massive value add to your organization and your ability to grow and create a sustainable organization.
Well, and surely that is, like you said, an evolution from 3 locations, 5 locations. Yeah, you can probably eke by with a bookkeeper, but even at 5, you've got to really get those foundational pieces in place and then be thinking down the road, hey, is my plan to add a location or 2 locations a year? And at what point do I need to add a fractional or full-time CFO? And that's one of the things, again, with our fractional COO program that Aiden goes in. And the end game when these groups get large enough is to have the right executive team in place. And until then, we use the experts and we like to have experts like you to lean on. Now, thinking about all of this financial planning, reporting, data, what kind of strategy do groups need to be thinking about in terms of that data management?
Oh, this one is such a hot topic
I bet.
because in dentistry, data is just so hard to get. Practice management systems, I think they're trying to get better. Some of them are still very closed and you can't pull your data out, or you have to just spend a lot of time mining data. I will tell you that right now in the environment that we're in today, if you're 5 getting to 10 locations, you're going to have a really, even if everybody's on the same practice management system, you're going to start having some problems with pulling data and being able to generate KPIs and those things without without creating some type of a data warehouse or some place where you can take your data out of those systems and then organize it in a way that makes sense for the way that you're running your business. When I say that out loud, I can see dollar signs going off on people's head, like that's got to cost a lot of money and different things like that. Every situation's a little bit different. You'd be surprised at how inexpensive it is to just get that stuff organized and own it, and the impact it'll have on the business will be tenfold at a minimum in terms of your ability now to be in control, to understand your data. Because again, the more accuracy that you have in all of this data, the better you're going to be at understanding and seeing the future and deploying your cash efficiently so that you can grow to your heart's content.
Seems like at some point it's going to be more costly to not manage your data in the right way.
That's exactly right.
If you don't have the transparency and visibility into each of those aspects of your business, how can you grow effectively?
Right. I say it a little bit differently than that. I say, if you've ever hesitated to hire a professional because of their cost, wait until you see how much it costs you if you hire an amateur.
Ag. Very good point. Very good point. Yeah, if you're thinking you need one, you need one. You definitely need one.
Yep.
So, financial reporting, financial statements. If you could choose only one, which would it be and why?
I think this is going to be a surprise to most everybody in
Okay.
the audience. I have 3 to choose from. I have the income statement, the balance sheet, the statement of cash flow. I would choose the statement of cash flow all day long.
Tell me why.
And the reason why is because in the game of business, there's only one thing that matters. Am I consuming cash in my business or am I generating cash? And that's it. That's how you know if you're winning or losing the game. Okay.
Absolutely.
And so I personally go to the statement of cash flow. I jump right over the income statement. I jump right over, and when I look at any financial reporting whatsoever, I go to the statement of cash flow first. I look at cash from operations. I subtract CapEx. That's my free cash flow number. And I want to see if I'm generating or if I'm burning cash in my business.
Wholeheartedly agree with you. Wholeheartedly agree with you. So, I want to jump back. You mentioned something earlier about a book that you wrote. Tell me a little bit about that. Why'd you write a book about dental finance? I mean, rhetorical question, of course, but I want to hear more about the book.
No, I mean, most people shake their head when I say that I wrote a book and I tell them what the title is, and they're like, why would you do that? So don't feel bad at all about that. I've just been in and around finance for my whole life and career, and dental. So these 2 things are my 2 passions. It's where I spend all my time, and it's what I think about all the time, and my family is tired of me hearing about it. I did drag my daughter into the project because I knew that if I wrote the book, it would be boring, and so I had her write a narrative story where they follow Julia, who has 3 dental practices, and she's trying to figure out how to grow, and she's trying to decide if she should be a DSO or not, and all these different things. And so there's like this dramatic piece of watching Julia go through this process of trying to grow her dental organization. And then I slipped in different places and explained some of the concepts or some of the techniques and things that go with the book's called Financial Secrets to Grow Dental Organizations. And so we're just giving all the tidbits and all the ways and things to do things.
Well, and what some might view as dry information, I think wrapping a story around it is a great way to educate people and make the book more fun to read. And I think that's a motivator when you're able to engage and see it from your own perspective as a practice owner, as a business owner. So kudos
Somebody
to you.
you can relate to. Thank you. It's really funny because a lot of dentists have come to me and said, "Hey, I really loved your book. I gave it to my CFO or my fractional CFO, and they're implementing all these things." They say, "I love the book and I love the story about Julia." And then I come across others that are more technically based, and they're like, "I hated the story part, but I really loved all the technical things and all the tips and tricks that you're sharing throughout the book." So,
Ah,
hopefully, it now goes broad enough that everybody can benefit from it somehow.
well, good. It's on my reading list for sure. I'm excited to read it. All right, I have one last question for you. So, when we're talking about enterprise value, what's the one driver that'll drive enterprise value up more than any other thing?
I love this question because nobody's talking about this. When we talk about enterprise value, it's a very simple multiplication problem. It's
Mhm.
your EBITDA times a multiple.
Right.
Your EBITDA we understand what that is. Built into your financial statements right there. We know EBITDA. It's this variable over here of what multiple am I getting paid on my EBITDA? And what drives the highest multiple possible in every scenario is maybe let me start with this. We look at the stock market, Apple stock, Tesla stock, whatever. We can look at that, and the market every day is creating a value for that business, and it's going up, going down, all those different things. And it all is driven by the market's belief or lack of belief in the future cash flows of that business. And so if the market feels like that business is not going to do well and is not going to be able to execute on its 5-year plan, then guess what? The multiple goes down. And what most dental leaders don't understand is that the level of confidence that they have about being able to execute flawlessly on their 5-year plan is everything about how big your multiple is. If you don't have the confidence, if you don't have validated assumptions, if you haven't gone through this financial planning and analysis process, and I'm not saying, oh shoot, I'm going to go to market next month, and so let's throw something together. No, you cannot do it in that period of time if you want to do it right, and if you want to get your highest valuation. You would need to invest in the process earlier so that you've got lots of time to really vet out everything that you're building into that future looking forecast. And then when somebody shows up and says, "Hey, I'm interested in buying your business. Let's talk about your 5-year plan." And you just are nailing it. Every piece of the puzzle, they're like, "Holy cow, these guys know how to execute. They know what they're doing. They know their numbers." All of these things come together. They're like, "Man, we are really confident that you're going to be able to execute on this." And then ultimately what they're doing is paying you up front for what you would have accomplished on that 5-year plan. And if you're staying, awesome, you'll be able to execute and show them what a great operator you are. Or if not, you still are going to get paid for that if your exit has been negotiated as part of the whole transaction. And so we don't talk about that enough. We don't talk about that when we know and really have the plan for the next 5 years, and it's put into the format of what we call a financial model, 3-statement model, and that model becomes the make or break for the valuation of your business more than any other thing that can happen in your process. I don't know, Jamie, what thoughts do you have on that?
That's a great answer. And to elaborate on what you said, having that financial model in place, is that your starting point that you build from? And what changes do you need to make to get there? Is it
Yeah.
implementing the right financial services? Is it another optimization that you can create to increase value? But like you said, at the end of the day, it's about cash. So,
That's
very
right.
good point. Everything we talked about today lends itself to optimization, improving your business. And I love what you've built. And thank you for sharing about the book. And regardless of where our listeners are in that journey, whether they're just starting out trying to get a handle on their finances. I think you have a lot to offer, and I love what you've built in AccruDent. But before we go, I want to pause and comment on something I saw on your website. So I was looking around after you and I met, and I was so pleasantly surprised to see it. And I found it on your About page. And it's actually a sneaky little test I use when I meet new people. And it gauges their mindset and how they manage life. And I love that you have come at your business from a place of serving other people and setting them up for success. And what I saw on your website on that About tab was the glass half full versus half empty question. And we can probably agree that everybody says they see the glass half full because otherwise you sound a little salty. The only answer in my book is that it's refillable. And that's what you have on your website. And I love this so much.
Good.
You mess up, we start over. I don't care if you have the wrong processes in place. There's time to make that change. Do it all over again. And then, be grateful for the opportunity to learn from those speed bumps. And most importantly, surround yourself with other refillable, I'm air quoting, people and the resources that serve your growth. I mean, not just personally, but professionally too, because those often overlap, don't they? I was so grateful to see that little nugget of wisdom on your website. I know our listeners will appreciate that too.
Yeah, that's part of our core values. When we sat down and wrote those, when we started AccruDent, we wanted a way to express that we want to have an abundance mindset about everything. And people who have an abundance mindset look at the glass and they're like, I don't see it full or empty. I just know that it's refillable and I'm going to keep rolling.
100%. Love it. Ken, it was such a pleasure having you on the show today. You've got some wonderful insights for our listeners to think about when they're considering those elements of their financial health and how to access the right resources to support that strategic plan, that growth plan. So, what's the best way for our audience to get in touch with you?
Sure. So there's a couple of ways. First of all, if you're on LinkedIn, you can come and find me, Ken Kaufman. It's Kaufman.
Okay.
Happy to engage there. You can also send me an email, ken@accrudent.com. Yeah, I'd be happy to connect with anybody if you've got any questions or if I can point you in a way that would be helpful. I'm always happy to do it.
Great. Thank you. And we'll put your contact in the show notes for our listeners so they can get in touch with you directly. Well, if you'd like to schedule some time to learn about any Polaris Expert Advisory Services, or maybe there's a topic we haven't covered that you want to hear about, you can send us an email to info@polarishealthcarepartners.com, or you can reach us by visiting our website at polarishealthcarepartners.com. Thanks so much for being a loyal listener and subscriber. If you enjoyed today's episode, please leave us a rating on Apple Podcasts, Spotify, iHeartRadio, or wherever you get your podcasts. We'll see you on the next episode of the Group Practice Accelerator Podcast.